Good evening, ladies and gentlemen. I'm Hasanta Miragala, Manager Corporate Finance and Strategy. On behalf of my team, I would like to welcome each and every one of you for our final quarter results webinar for FY25. To start things off, few housekeeping announcements. So as usual, this webinar will be recorded and then later uploaded to our IR website as well as the CSC website along with this investor presentation. You can use the following link to access these documents. So all participants will be muted upon entry, and during the Q&A session, you can either use the raise hand option and I'll unmute accordingly, or you can use the chat box function to type in your questions as well. Similar to previous quarter presentations, we'll start off with the quarter highlights, corporate announcements for the quarter, and then group highlights for the quarter. And then we'll deep dive into each of the sub-business segments to understand what has happened during the quarter. And then we'll end the session with a Q&A. First, let me introduce the team that we have today. We have Mr. Shyam Sathasivan, who is the Group CEO of Sunshine Holdings PLC. Then we have Mr. Arunadipti Kumar, Group CFO, Sunshine Holdings PLC. We have Mr. Hiran Samarasinghe, Chief Growth Officer, Sunshine Holdings PLC. And from the respective businesses, we have Mr. Shanta Bandar, who is the CEO of Sunshine Pharmaceuticals and Healthcare Distribution. We have Dr. Thiru Sayanthan, who is the CEO for Sunshine Medical Devices, as well as Alina Manufacturing. And we have Mr. Farman Nizar, who is the CEO of Healthcare Pharmacies. And on the consumer side, we have Mr. Amrut Dalvihari, who is the CEO for Consumer Brands. To start things off, let me quickly cover the corporate announcements for the quarter. So during the quarter, Sunshine Holdings PLC declared a final dividend of 60 cents per share for FY25, which has the expiry date of 30th June and the payment date being 18th July. Similarly, whatever the PLC declared a second interim dividend of ₹1.40 per share in March, following a final dividend of ₹1.30 per share in FY25, which follows the same expiry date and the payment date. So with that, I'll hand over to Mr. Shyam Sathasivan to kind of walk you through the group highlights for the quarter.
Thanks, Asanta. Welcome to all of you. Thank you for being here for our annual results call. So let me just take you briefly through the group performance before my colleagues, the CEOs of each of the businesses, can deep dive into the sectors and give you more depth. So big picture, we've had top line growth of about 7%, driven by our 17% top line growth in healthcare business. Healthcare, as you can see, is close to 55% of our overall revenues. Primarily, we've seen growth mirrored in the top line, also in our EBIT. We're seeing a 7% EBIT of 9.3 billion. This is driven, as I said, by healthcare. We've also seen some growth in agri in the space. Of course, we've had some hits in consumer, and I'll take you through all of that. Our ROE continues to be quite positive, and most importantly, our market cap has dramatically risen through the year, and we'll take you through some of that journey as well. If I take you into some of the details of our financial results, as you can see, quarter four was quite healthy. We've had good growth in quarter four in EBIT and in PAT. For the year per se, like I said, our EBIT's driven by our GP. GP was quite positive in healthcare and as well as in the agri business. We did have some GP impact in the consumer business. The tea cost was higher this year versus last year. So there's some impact there that's driven all the way down into EBIT as well. But the PAT of the agri business was impacted by the full year tax of 30%. Hence, our results have some of that impact you can see in PAT versus EBIT. But this is a one-off sort of change, which we think will now move forward and we can build upon this. If I take you through the drivers of our revenue and our EBIT, as you can see, healthcare has been the single largest driver of both revenue as well as EBIT. Our brands, with consumer brands, has had some challenges. More in the GP, like I said, in the T costs, and that will recover as things settle down. If you see, last year was an impact of both T cost and as absorbing the VAT. So multiple impacts in that angle. Agri, I think, has started to see better GPs. While revenue was short because of some volumes, GP has improved. And overall, the group settled from a journey of when nearly two-thirds of our business is from the healthcare, plus 55% and moving, consumer, and then in our partnership in Butterfly Plantation, which is our agri sector. Of course, the year has also marked what has been a phenomenal journey for Sunshine Holdings across the last 10 years, but especially the last 5 years. Since the dip of COVID onwards, it's been a relentless increase for us of value creation and value realization. We acknowledge all the market participants who have engaged with us to understand our value proposition, but also overall our results and our business model has demonstrated resilience and growth. And so you can see a near 50% compound average growth across the last 5 years. And we continue to be bullish on the value we create for all stakeholders. With that note, my pleasure to hand you over to our healthcare team. I think Shanta Bandara, the CEO of the pharma and the distribution business, will get us kicked off. Thanks.
Thank you, Shyam. Good afternoon, everyone. Let me firstly take you through the overall sector performance. Hasanta, I think the slides have not moved. Yes, thank you. See, the overall healthcare sector, as Shyam mentioned, have done very well with almost a 16% growth in the quarter. And the year has also been very good for us, mainly driven by Lena and our distribution business, as well as the pharmaceutical business, contributing to the 17.3% year-on-year growth. So this has given us a very good results for the year. Let me take you through the pharma segment, pharma business. The pharma business Hasanta, I think the slides need to move. Maybe timing. So the pharma segment for the quarter has done a good growth in revenue of 14.3%. And the important thing for us was the volume growth, whereas the industry was almost flat on volume, and even on value, the industry was growing around 3%, whereas the pharma business was able to deliver for 15.6% annual volume growth. This was significant for us, mainly contributed by some of our key agencies. Galderma is one of our cosmetic arms we have, having Cetaphil, known brand in the cosmetic arena in skincare, has done very well. And also Glenmark, our dermatology business, also have done well, while some of the other leading agencies have contributed to this volume growth of 15.6. Moving on from the pharma business, let me take you to the distribution business, where we have done extraordinarily well during the quarter as well as for the year, where we consolidated the business, this new business of ours, to be a sales and distribution arm or a sales and distribution service provider, not only for our own companies in the sector, as well as attracting new business from the industry. So we are happy that agencies or companies like Cipla, that is the Breathe Free Lanka, that is Cipla's local arm, which has partnered with this business, and also Microlabs is also one of the leading pharma giants in India who has operations in Sri Lanka, who also have joined. So we see that distribution, sales and distribution as a service have actually gained traction, and we are gaining new accounts, which has led for this 28% growth. I think with that, let me hand over to Sandan to take you through medical devices and Lena. Sandan, over to you.
Thank you, Shanta. So, ladies and gentlemen, it was yet again a remarkable year for Sunshine Medical Devices business, achieving its revenue budget above 100%, achieving its GP and also the profit after tax targets. One of our key initiatives that we took for the financial year FY25 was to grow the units, because earlier after the recession, we had challenges in some of our key agencies, the unit coming down, and this is something we achieved. So overall, the Sunshine Medical Devices had a unit growth of 20%, especially from its big agencies like Siemens Healthineers, Johnson and Johnson, 3M, which is Solventum now, GE Healthcare. All four these top agencies grew the units in double-digit growth, which helped us to achieve a remarkable performance for medical devices, achieving its profit targets as well. So that was one of the growing units, and getting back into the private sector, because the previous year our private sector sales came down to 45% from the total contribution, but last year we once again ended up 51% contribution of our value coming from the private sector. So these are some of the key attributes, together with the managing the working capital, which helped the Sunshine Medical Devices business. And if we go on to moving to Lena Manufacturing, which again had a star performance for the financial year FY25. From a 12.4 billion, our revenue grew up to 4.1 billion in the financial year FY25, largely contributed by the metered dose inhaler, because Lena Manufacturing is the only metered dose inhaler manufactured in Sri Lanka, and we enhanced ourselves supplying the full orders to the government sector. So we supplied the full quantity what the Sri Lankan government had ordered, what they required, which helps us to achieve these growth. So here again, one of the key factors which further helped us to strengthen our profits was to manage our working capital, where we had good collections from the government sector as well. And also we improved other parameters like attrition, which attributed to the business. We managed them well. So overall, an excellent performance by Lena Manufacturing as well, achieving all of its key parameter targets. So with that, let me hand it over to Farman, who will take you through the retail business of HealthGuard.
Thank you, Sander. Good afternoon, everybody. So the retail business actually has done extremely well. 2-3 points I want to mention. Number one is the fact that year on year we've grown by 14%. That's a steady growth, and compared to previous quarter also we have grown by 3%. When we compare market data for Western Province as well as for All Island, the market has been flat, but our numbers are exceeding 14% in terms of purchases to the market. So that's a healthy top line. Similarly is the bottom line performance. This has been driven by multiple areas. Now, one of the areas is our organic growth in our same store performance. In the month of March, we introduced our 16th store in Malabe, which is exceeding our performance for the last 3 months, and I'm happy to talk about that. But the other 15 stores are doing well. We had our share of challenges, and we are finding newer ways to actually grow. Promotions, creative promotions have been something that's been helping us. We had a blockbuster promotion in Q1. Another one will follow in the middle of this year as well. We are confident that the Q1 performance and Q2 will actually keep the same trend. Typically for Q4 to Q1, performances are flat because of the less number of days, but delighted to let you know that we've been actually doing pretty well and exceeding our numbers in Q1 versus Q4. And this is across our subcategories, which is pharmaceuticals as well as wellness and other. All three categories are growing, strongly driven by volume growth. Price growth, a component of price growth was applicable to the wellness category, but predominantly driven by volume growth. As you can see from the numbers here, the basket count, or the bill count, is showing a healthy recovery this year. From January, February, we saw a healthy recovery in the bill count. ATV, which is the amount of value that people buy, that has been something that we've been consciously working on, and that's continuing to do well. So with that, I think I like to confidently end the note that healthcare is the healthcare retail business is actually is in a strong momentum, and we hope to continue that for the rest of the year. So with that, I'll try to give it over to my colleague Anuruddha, who will take over the consumer business.
Thank you, Farman. Hi, everyone. Good evening to you. Let me take you through the consumer sector highlights. Hiran will take you through. Hasanta, if you can move to the next slide. Hasanta. Yeah. So let me take you through tea performance. Tea business saw a 7.6% growth year-on-year increase in revenue Q4 versus last year, reaching 2.4 billion, taking the total revenue to 9.6, reflecting an 8.8% year-on-year growth. Despite contraction in top line, overall volume grew by 2.2% year-on-year, showcasing the strength and stability of our brands. Positive growth in Q4 versus Q3, the trailing quarter, 7.6% increase. Volume growth remained stable with a notable increase in full year 25. Consistent growth in revenue and volumes, despite market challenges, highlights the resilience and effective strategies of our tea brand segment. The positive revenue growth in the last quarter is a testament to the successful customer activation initiatives and cost management efforts. This strong performance sets a promising foundation for future growth and stability in tea business. Moving to confectionery. Hasanta, next slide, please. Yeah, the confectionery business experienced an 8.1% decline in revenue quarter-on-quarter or trailing quarter due to lower sales volume. Despite the annual decline, there was a growth in both revenue and volume on quarter-on-quarter basis, indicating early signs of recovery. Total revenue of 1.9 billion, reflecting 28% decline compared to last year, mainly due to revised trade incentive strategy, one FMCG category merge, and lower consumer spending following VAT increases and higher inflation impacts. Positive growth in Q3 versus Q3 with a impressive 11% increase in Q4 was remarkable. Volume growth showed a 5% increase on quarter-on-quarter basis. Despite the challenges faced in FY23, the confectionery business is showing a promising signs of recovery with a positive quarterly growth in both revenue and volume. The resilience and adaptability of the business in navigating through economic pressures and consumer spending fluctuations are commendable. This upward trend in the last quarter sets a hopeful tone for continued recovery and future growth. With that note, I will hand it over to Hiran. Hiran will take you through the tea export business.
Thank you, Anuruddha. So good evening, everybody. Let me take you through the consumer export performance. In terms of the last quarter, slightly challenging, year on year down 9.5%. But in the context of the year, if you can see the chart on the right-hand side, most of our revenue was from the first and the second quarter. So it was front-loaded in the first half, and hence the dip in the fourth quarter. So let me focus on the full year performance for FY25. We achieved a 7.3 billion revenue for the year, which is a 19% growth in terms of revenue in rupees. It's also a 23% growth in terms of value of USD. So as you know, the exchange rate went against this business, and hence the rupee value is slightly lower. This also came on the back of a 11% volume growth of exports. So that's, if you take the entire year, that's very commendable. Also, in that volume growth, we had the volume mix changed. We had a higher volume of tea bags, which is a more higher value adding product compared to bulk and packets. So that's also going on the correct direction. In terms of focus areas for next year, we are predominantly focusing on white label expansion in the Far East, and that is where our CEO is currently spending his time, and hence I'm stepping in. And also, we are very bullish on the West African market, with a focus on own brands. So those will be the two key areas that we focus on to grow the business going forward. With that, I think let me hand over to Sham again to cover the agri sector.
Sure. Right. So the agribusiness for Sunshine is, of course, our investment in whatever plantations PLC. So overall, the company has had a positive revenue growth in Q4 and for the year. So I think the year is, of course, reflecting some of our volume contraction, which I will take you through in the specifics of palm oil. So the sector here is both palm oil and dairy. If I take you through palm oil specifically, so our palm oil segment has had we face both issues of volume. Most of it is to do weather related, and then of course price. Here, pricing is primarily based on the global palm oil prices. Palm oil prices have been dipping in the last few weeks or so. But broadly through the year, like I mentioned earlier, our GPs were reasonably healthy, especially into second quarter, and that dropped down to our EBITs as well. But I think volume is where our focus will continue to be. Quarter is where we had significant volume contraction, and so that's where the focus in this business is going forward. If I take you through the dairy business, the dairy business has had more challenges in the year. Milk pricing has been quite challenging for us in terms of where things have headed. Volumes have contracted, and this is to do with milking herd. We have not pursued significant increase in the milking herd size as we wait and see in terms of milk price recovery. But overall, I think we're continuing to be productive and our yields are positive and we're looking for growth. But milk price continues to be a challenge, as you can see in Q3, Q4, nearly 13% off last year. So that's the impact in this business. I think you would have also seen we would have taken impairment overall in the agri sector due to the dairy business performance, but this is a one-off exceptional. So that's also a drag on the agri results. So that's all things to do with agri.
Yeah, I think we can go into Q&A.
Yeah. So thank you, team, for the detailed insights into the movements in each of the business units. So with that, we can move into the Q&A session. So as I mentioned at the start, you can use the chat box function to type in your questions, or otherwise you can raise your hand, I'll unmute you and you can ask your questions. A question from Tarushi. Do you see similar demand volume-wise for MDI from the government in FY26? Further, how does Sun plan to navigate the incremental supply from capacity expansion with the IFC infusion? And then, go to you.
So overall, the MDI, we supply 6 meter dose inhalers to the government. If you take the overall, the quantities are very similar, but we see a change in the trend coming from the College of Pulmonologists who are taking a conscious call to reduce the usage of salbutamol in Sri Lanka. Hence, they want to cut down on the quantity of salbutamol orders way forward. But the good thing is they want to increase the fluticasone and the formoterol. So fluticasone already they have ordered for this year. Formoterol is something which has got listed but yet to order. So these two molecules are manufactured by Lina Manufacturing. So in terms of trend, these will be the future molecules. How globally asthmatics are being treated will come into play. But overall, in terms of numbers, it will be very similar. To answer the second part of the question, yes, utilizing the IFC and to manage the capacity, Lina Manufacturing has already installed the second line of the meter dose inhalers, and we have successfully manufactured 92 batches. And to further enhance, this year we'll be doing the automation of both the MDI lines, which will give further capacity utilization and bring in more efficiency. And to answer that question further, we'll be also spending the IFC funds to enhance our tablet lines, where this year we are planning to spend the capex on a fully fledged tablet line so that we exploit the opportunity for tablets as well. So trust that answers both the questions.
Thank you, Sandan. One more question for you. What mainly caused the drop of pharma manufacturing revenue during the last quarter? Has the government buybacks towards Sunshine reduced for the ongoing year?
Yeah. So one of the main reason is generally, though it's the last quarter for Sunshine, where the government is concerned, it was the first quarter because these are annual orders from January to December. So with the change of government, with the change of the general election coming in, there was a delay in giving us the confirmed POs. So based on that, we had to make the supply. So because of the delay in POs, our quarter four sales came down in numbers, but you'd see a gradual increase in the Q1 of this year, and we are planning to finish this year's supplies as well to 100%. And with regard to the buybacks, yes, the buyback guarantees have expired. The way forward, how the government is moving is they are requesting all manufacturers to submit the EOIs, and based on that, the government is signing 1-year agreements with for all the molecules, and that's how they have given the orders for this year.
Thank you, Sandan. One more question to you. How would the 8% price reduction on government orders will affect the healthcare margins?
Overall healthcare margin, I do not have the figure, but definitely it affects the Lina GP, which we have factored in our new budgets. But one of the reasons how we are managing is through automation, efficiency, and also through capacity utilization to reduce the cost so that we maintain the GP. But of course, this 8% reduction has been captured in the FY26 budget, and that will be mainly due to the dollar appreciation. So overall, we should realize the same value of GPs what we got last year.
Thank you, Sandan. Question from Oshan. The CPO production volume has contracted for a number of quarters in a row. Is this expected for the next couple of quarters as well?
So broadly, I think what we've had is heavy wet days through the last sort of 2 quarters. Generally, we have around we don't have as many wet days as we've had in the last 2 quarters, and that's impacted. We've also had some adjustments in our working methodology on the ground in harvesting. So that's also had some impact. We are right now in peak season. So Q1 is peak season into Q2, and quite positive in terms of volumes we're seeing. So that we see that as, a mix of both, like I said, weather related and also some work practice related.
Thank you, Shannon. Another question to you, Shannon. What is the total production capacity of Lena manufacturing right now?
So Lena manufacturing capacity, it keeps on varying because metered dose inhaler line being the most busiest. We started working for 24 hours and all our capacity utilizations are measured at 24 hours. And that is something which went up to 100%. But with our second line coming in, we have brought down the capacity utilization of MDI at 51. And tablets were around 30 and the capsule line is around 26. These are all measured against 24 hours capacity utilization. So overall, we are closer to 40% where we are, which gives us a lot of opportunity to do more manufacturing for Lena.
Thank you, Shannon. Question from Shalini. Will Sunshine Tea exports see any impact from the US trade tariffs?
Thanks, Shalini, for the question. I think there is some impact. We are one of the exporters through our partner Ahmed Tea. We export about 6 million kilos to US annually. $6 million worth of tea annually. We see some impact, but again, if you take a portfolio company perspective, it's a smaller component of that. So there won't be a major impact on the consumer sector.
Thanks, Jan. Another question from Shalini. I think Aniruddha, you can take this. What is the outlook on the local consumer business? Do you see any signs of recovery?
Yes, Hassan. So we are very optimistic about the future. So we see some, like the good news is that especially in the confectionery business, we see industry is growing, so that there is opportunity for us to capitalize on the growth on confectionery. Apart from that, even in the market situation, we see some huge improvement in terms of additional money circulation through tourism improvement and also some taxes reliefs, so that there is a positiveness in the marketplace. However, low unit price SKUs are still on high side. So that indicates that the spend is very conscious, the consumer shopper is very conscious about what they're spending. So that is where we are targeting in terms of confectionery, as well as we are focusing on value for money segment in tea as well. But overall, both tea and confectionery is in a very positive trend.
Thanks, Aniruddha. Question to you, Shanta. Currently, 87% of the pharma distribution business consists of internal customers. With the signing of new distributor agencies, what do you think this share would be for FY26?
Yeah, Sandhu, thanks. Yes, I think the agreements came during the latter in Q4. So we were just setting it up, and I think we have kicked off most of this, and the teams are deployed. So we see that 87% would improve to be about 80% from internal and 20% from outside the group. So this is the plan for us, and the current 3 agreements and the agreements that we already had with Truvik will improve to be about 20%.
Thank you, Shanta. Question from Sean. Is there any plans to improve the milking herd population back to the historical levels? When do you think expect to take that initiative?
Sure. So in the dairy business, I think we are looking for better price discovery. I mean, prices to recover. There's been some relief to consumers on the VAT, but that hasn't flown through into the manufacturers. So I think it's still, our feed costs continue to be reasonably high. And therefore, GP overall in the farm, in the dairy industry, for those of us with both the herd as well it has been a challenge. So I think we will pause before we invest further in that for now.
Thank you, Shan. Another question to you, Santhan. Is a 24 line is now required given that 2 lines are now operational in the Tina manufacturing business?
So to answer that question, yes, I think the question refers to the meter dose inhaler lines. Technically, the answer is no. We don't need to go 24-hour line since we have 2 lines on the meter dose inhalers. But practically, we need to go in for 24 hours where we have campaign manufacturing. When we start on a particular molecule, we go on a full run on campaign manufacturing. At that time, we prefer to run 24 hours so that our efficiency and the cost benefits comes to Lena, where we can increase efficiency and deliver more profits. So that'll be the only reason. And also way forward, if we get any contract development manufacturer orders coming in, and also to meet the deadline, because this year order technically by 9 months we need to deliver the orders. That's another reason we are going 24 hours so that we finish off our orders early. And also we anticipate a 3-week closure on the automation. So all these reasons will be running 24 hours.
Thank you, Sam. A question from Dinesh. Can you comment a bit on the new government's stance on palm oil?
There has been no sort of change in position by the current government through the, I think, Planters Association and through the Palm Oil Industry Association. There is engagement with the Plantation Ministry about next steps. So big picture, I think our view is there is room for policy adjustment, especially in allowing the industry to replant areas that have already been planted with oil palm, where we run on a 30-year cycle or so. So there is opportunity to replant, which will get better yields long term. I think this has to be balanced with the overall national edible oil policy of between all edible oils, coconut, palm oil, etc., and imports versus local production. We see room for movement, but there hasn't been any yet.
Thank you, Shan. Question from Tarushi. What is the 300 million loss on biological assets related to? And is this a one-off expense?
Arun? Yes, this is a one-off expenses. This is a third valuation that we carried out annually, and because of the pricing impact, we had to write down some of the third valuation for the financial year.
Thank you. Question from Sean. There is a sizable jump in overheads in agriculture segment in admin cost and negative other operating income. Where is this originating from?
Sure. I think the admin is more in terms of structure. So we've done some changes in the overall org structure of the business, especially by having more professionals coming to the mill as we're sort of scaling up production in the mill. And also we've had some investment in agronomy practices, practitioners in the estate as well. So I think some of it is investment, which has been long overdue through the last few years because of crises, etc., have been postponed. So we've taken them on through last year, and we hope that'll all benefit us in greater productivity into the future. In terms of other income, Aruna, anything specific?
Other income,
so then we can come back.
Yes, yeah. One question from Dinesh. What statistics were used on your International Tea Day 2025 ad that suggested that 1 out of every 2 cups of tea is served by Sunshine. Does this include Akbar Brothers in its computation?
So let me answer the questions. The data we used for this business, that we use in the business for the local branded tea is the Pepper Cube data, which was the formerly AC Nielsen data. So in branded tea, Sunshine's brands, Zesta, Vatavala, and Ranpahata, have over 50% market share. Anuruddha, anything to add on that?
Yes, sir. Now this 50% should include without modern trade and wholesalers. So definitely it will be around 50 plus percent. So that's a message that
Right.
every 1 in 2 cups are from Sunshine Company brands.
Your question on Akbar, those are export. So Sri Lanka,
Yes.
of course, has 10x more export than domestic consumption, or about 320 million kilos or so. Nearly 90% is exported. So there's a whole set of different players in the export segment. We're talking about the domestic tea and domestic tea brands, where our business is focused on.
So if there's no further questions, I think we can wrap this session up. So on behalf of Sunshine Holdings PLC, I would like to thank each and every one of you who joined this quarter's webinar, and I hope to see you all again in our next quarter webinar as well. Thank you so much. Have a good day.
Thank you. Thank you.
Thank you.